Hello everyone, and welcome to LAT's Market Snapshot. Today we're going to be taking a look at the Holy Grail trade. Holy Grail trade is a very systematic approach to following a trend. It's a set of rules which allow us to place an objective, stop loss, entry and target. In our example today, we're going to be having a look at dollar yen on the 5-minute charts. We can see that our price is in an uptrend, and the first thing we need for a Holy Grail trend is a strong short-term trend. As well as a short-term trend, we also need a 14-period ADX and a 20-period exponential moving average. What we're looking for the Holy Grail trade is we want to see price moving in a short-term uptrend or downtrend, and we want to see price have a slow corrective retracement back towards our 20-period exponential moving average. As price retraces back to our moving average, we want to see that accompanied by a downturn in ADX, which we can see here. As price pulls back towards our moving average, we can see a small downturn in our ADX. We then want our exponential moving average to act as a dynamic support for the price. As price comes down, we want to see that price then bounces off of our moving average. As price does this, we can then look to place an entry price, a stop loss price, and a target price. For this example, we can place an order above a 2-event high. In this example, our 2-event high would place our entry around this price here. So we could place an entry for this trade around this area above our 2-event high. We can place our stop loss a couple of pips below our recent low, which would place that here. If we had price forming a price pattern on the way down to our moving average, which would be ideal, we could use the MPO for our price pattern, whether that be a wedge, a falling wedge, a flag, a pennant. If one of those retraces back to our moving average, we can then use the objective MPO from that price pattern to target that. We can also place our stop loss and entry underneath the price pattern and our entry on the break of our neckline. This would be ideal in this situation, although we haven't quite got a price pattern formed here, but we have got, as we can see here, a candlestick pattern. So we can see we've got a dragonfly doji forming at the bounce of this moving average, followed by a large engulfing of a bullish candlestick. This is known as a morning star and is a very bullish, has a lot of bullish sentiment behind it, and is a very good signal for what we're looking for here. In this particular example, since we haven't got a price pattern to provide an MPO, we would just look to target a 1-to-1, whether that be around this high here or possibly slightly further. Since we have no MPO or minimum price objective to target, we would look to target at least a 1-to-1 to ensure that the trade is valid. We would then wait for price to break up through these highs. This would enter us into the trade. It would automatically set our stop loss, automatically set our target, and the trade would run until we hit our target. This can be a very good objective way to enter a trade, especially on a chart such as dollar yen, which moves very aggressively, and we might struggle to find an entry point on this chart. The Holy Grail trade will help provide a good entry level at a good price and can stop FOMO and other psychological biases taking over your trade. So that's the Holy Grail trade. Thank you for watching, and we'll see you next time.